Hey guys, it is Julie here with TipRanks, and today we're taking a look at a few top analyst stocks. So let's get into it. Alright guys, welcome back. Thank you all so much for being here, and happy Friday. Not just any Friday as well, the Friday before a long weekend. Just a reminder that the stock market is closed on Monday for Labor Day, so enjoy that extra day off. Now today we're taking a look at a few top analyst stocks. Found under the Ideas section on the TipRanks website, here you can find stocks that come in with a strong buy or strong sell rating consensus according to the best performing analysts. Today, we're taking a look at 3 stocks that come in with a strong buy and have picked up ratings as recent as today. And don't forget, while you're over on the TipRanks site, to check out their newsletter center, where you'll find both the Smart Investor and Dividend Investor newsletter, which will send unique insights to your inbox every single week. Links will also be in the description down below. Now let's jump right into these top analyst stocks. First on our list today is a company called XP, and their stock trades under the ticker XP. They're currently priced just under $26 per share, and the stock has seen great growth. This past year, they're up over 33%, and that includes growth of 43% in just the last 3 months. XP is a technology-driven financial services platform. The Brazil-based company offers services in investments, technology, career, and financial markets. Their product platforms include brokerage securities, fixed income securities, mutual and hedge funds, structured products, pension plans, life insurance, and more. The company has over 1,024 billion reais in client assets and over 4 million active clients. The company shared their Q2 earnings report just a couple of weeks ago on August 14th, and they did come out with an earnings beat. They reported earnings per share of 41 cents, which came in 3 cents ahead of analyst expectations. Gross revenue came in at 3.7 billion reais, which was up 12% quarter over quarter and 3% year over year, primarily driven by their strong growth in retail revenue. Their stock is currently rated a strong buy based on 8 current analyst ratings, with the most recent rating coming in today. That breaks down to 6 buy ratings and 2 holds. With an average price target of over $28, that would be an upside potential of 9% for the next year. Taking a look at our detailed list of ratings, on the low end we do have a hold from last month, which is a pretty flat price target. Our most recent rating came in today from UBS with an upside of 27%, and that is our high-end price target as well. Our second top analyst stock is Semtech. Their stock trades under the ticker SMTC, currently priced at $26.59. Their stock is down overall the past year, about 20%, but they have been rebounding lately and are up over 19% in the last 3 months. Semtech engages in the manufacturing and supply of analog and mixed-signal semiconductor products. Semtech is a high-performance semiconductor, Internet of Things systems, and cloud connectivity service provider dedicated to delivering high-quality technology solutions that enable a smarter, more connected, and sustainable planet. They make these products for high-end consumers, enterprise computing, communications, and industrial equipment. They offer signal integrity, protection, wireless and sensing, and power and high-reliability products. Semtech's next earning report is coming up soon on September 7th. Their latest report was back on June 7th, and they did come out with a surprise earnings beat. For their Q1, they posted a positive earnings per share of 2 cents, which was 10 cents better than the anticipated loss of 8 cents per share. For this next earnings report on September 7th, analysts are anticipating the same. Back in that first quarter, they did have net sales of $236.5 million, which was an increase of over 41% sequentially and 17% year over year. Their CEO noted that they're seeing signs of business stabilization, and with an expanded, highly differentiated IoT portfolio combined with their best-in-class high-performance analog portfolio, they are well positioned to emerge stronger from this current cycle. Their stock is currently rated a strong buy based on 6 analyst ratings, and we have seen a couple trickle in ahead of this earnings report, but we can expect several more to be reiterated following next week. Their stock currently has 5 buys and 1 hold with an average price target of over $35. That would be an upside potential of 33.5% from current prices. We did have a buy rating come in from a 5-star analyst today, but they did not assign a price target to it. The most recent one before that was 16 days ago, coming in with a price target of 50% upside, and there's a couple at that price, and then an older hold from 3 months ago with an upside of 12%. And our third top analyst stock is Academy Sports. Their stock trades under the ticker ASO and is priced at $53.59 per share. Now, overall, they are up 25% in the past year, but you can see they did take a big dip here back in April, down 8% in the last 6 months, but taking a jump up this past week, currently up 10%. Academy Sports, of course, is a fairly well-known chain of sporting goods stores. They offer a broad range of hunting, fishing, and camping equipment, as well as sports and leisure products. Headquartered out of Texas, they currently have 271 stores and counting. Their sales reached $1 billion back in 2003 and in 2022 crossed $6.4 billion. Now, the jump up you saw on their stock chart this week is in relation to their latest quarterly report, where not only they beat expectations, but they also increased their future forecasts. They reported earnings per share of $2.09, coming in 9 cents ahead of analyst estimates, and revenue of $1.58 billion was in line. They noted that moving forward, they believe Academy is well positioned to continue to capture market share as a leader in the sports and outdoor space. They're planting the seeds for future growth by opening 11 to 12 new stores this fall, building out their omni-channel capabilities, and expanding their portfolio of new and exciting brands that resonate with their core customer. And that latest earnings report seemed to impress the Wall Street analysts, as we currently have 15 analyst ratings, with 5 coming in just between yesterday and today. That strong buy breaks down into 13 buys and 2 holds, with an average price target of over $66 per share. That would be an upside potential of 24.5% for the next 12 months. Taking a look at those recent ratings coming in just today, they all range from 20 to 37% upside, including a high-end price target from yesterday with an upside of 48%. On the low end, we do have a hold from a few days ago with a downside of over 3%. So there we have 3 stocks all coming in with strong buy ratings and recent buy ratings from some top-ranked analysts. Let me know your thoughts on these 3 companies in the comments down below. Which catches your eye the most? I always love hearing from you guys. Please keep in mind these videos are never a suggestion to buy or sell any specific stock, just keeping you guys up to date with what those Wall Street analysts are up to, so please make sure you always do your own research and due diligence. Thank you guys so much for watching. I hope you have a great day, and I'll see you back here next time.